Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So, a very interesting day. Last few days, I feel like my hair was rising in the back of my neck saying, red dog, get short, reduce risk. You know, things don't feel right. Lots of sectors are below the 8 and 21 day. Lots of names have lost momentum. Nothing's following through to the upside, so we probably should see more downside. And we did, but it wasn't like things crashed, like the Dow's down 300 points. It's still not easy to make money short, especially in the indices. You really have to be somewhat perfect and have a thesis. Yes, shorting key stocks has been easier over the course of the past week because they broke down well before the indices. But either way, there's a lot of back and forth. There's a lot of two-way trades, and recently, again, reduction of risk, low gross, low net, and just a two-way trade has been the way to go, whether it's the H cell setup or the little RDR around the pivot into a key moving average, and take your trades and try not to go back to them, because sometimes you go back to them and chances are you ruin what was a calculated, timely cash flow type of situation well before. So, just go to the charts. We'll start dissecting it. Here's a chart of the S&P. Okay, here's your outside day, right? If you got short here versus 21.25 and went away for the last 7 or 8 sessions, you would have made a lot of money, right? Just based on the red dog reversal outside day, you wouldn't have to deal with any of the noise. You'd be up about, what is it? This is 30 handles, that's 20, 50 handles. But obviously we trade for a living, that's not the case. You had your first move down to this ascending channel, quick move back to the upper end of the range to then get negated. And today was a little different. Today, at least, I thought it was a lot easier. I came in net short. First time it got negated. I post a chart every day to try and give people a roadmap. On this day I also was net short, and I said if we get back above whatever this was then, I think 2094, it's not going to work. Get out of the way, because you're probably not going to have the wherewithal to roll it up. That was that. So today, with the futures up 4 or 5 handles, same type of thing. Would this day control today, or will we have a 60-minute close above the moving averages and negate the power of that? Didn't happen. So you could have shorted the open. You could have added here when we broke below 2088, and then wound up making lows all the way down to 2067. You could have picked and chosen where you wanted to cover and what you wanted to do. So here's where we are now. So that was then, this is now. If you reduce risk, there'll be people talking about an 8% correction, a 10% correction, a 20% correction. There will be some people saying that this was it. At this point, as a trader, you don't have to care if it was or it wasn't. But if you have a reduction of risk on an active basis, you're fine. You could just trade and see what's next. Now the question is, do we stay on the right side? This side of the trend line. Because again, from where we were at 2120 down to here, big travel range. Last time you had it, you bounced up quick. Chances are, what's going to happen here? So you shall see. When the IWM broke on the right side of its trend line, which it did, here, it took a little time. This was your break on the right side of the trend line. Then it kind of pushed the envelope right here before getting a little bit weaker and then having its follow through to the downside. Today, it wouldn't really go down. Okay, IWM's held this 120 support, closed green, while everything else closed red. And I don't think it means that that this is going to blast off, but it means it's a little oversold and there weren't as many sellers, and we'll see what happens in here. It means you probably don't want to be short the Russell overnight because it was acting somewhat stronger. See if it gets back into this area. The IBB that had the takeover news, still, not doing a heck of a lot that's constructive. You got some two-way trades. Here was your Biogen, sell the excitement news. Then you had this accelerated trend that broke after the lower high. That was a nice short for some. You have this trend. We talk about trends. Trends are your friend until they change. And then what happens is, if you stay on the right side of the trend, which I'm trying to show you with the S&P, and it stays on the right side, chances are you have more weakness. And right now, here you had your first move down to the moving average, a retest short, and now trying to hold higher. The question is, what happens in here? And I guess we'll have to see what's next. Some think you have it's actually just a weird chart. It's not even a head and shoulders pattern. But basically, here you are on the right side, and you'll see what's next here. There's still some excitement with the deals and whatnot. So Anyway, those are the sectors. IBB broke first, Russell broke second, mid caps also, and now finally the SPX is on the right side of the range. You know, do we have an inside day tomorrow? Do we get follow through to the downside tomorrow? Do we wait until the jobs number on Friday? Who knows? All I know is that the action has been neutral to negative versus neutral to constructive. You know, I even talked about the TLTs, about, you know, how to use charts, right? I know there are people out there that say just buy and close your eyes and it's going to happen. You know, that's not what we preach here. You know, you've had a lot of good entries. This was a great entry for the TLT. This was a great entry when it took back this high here. And then all of a sudden this accelerated trend broke right there. Gap below it, get out of Dodge. And then it came in, you had your island bottom. Could have bought here versus gap to see if it held. It did hold, had a nice little move back up, cleared this pivot. And then all of a sudden you had another inside range. So coming into that inside range, nobody knew. Would we go back to the highs, or would we break the 8 and 21 day and the 50 day and close back lower? What happened here is you had your wide range bar down below the intermediate range, and you get out, you get short, you get away from it. You don't sit in here unless you're on like a 5-year plan, which anyone that really watches this isn't. If you are, whatever. So anyway, after that, you had a little bit of a retest, and then boom, and took out this low here, and it's from there, it's been, you know, down straight. It tried to stop here. It actually didn't even try to stop here. It just broke through the 200-day. So if you follow my thesis, and you know, here you get out when it broke the 8 and 21 day. Here maybe you get back in for a trade. In here you're not sure. You get out. None of this damage happens to you. Okay, if you sit in there and you hold your nose and go in the water and be stubborn and think like you're the smartest man alive, chances are this could hurt you and put you out of business if you trade and not just use ink. But anyway, it's extended from these moving average to the downside. You can maybe see a snapback, but at this point, should you be long it? I don't know. It's oversold. Maybe you get a bounce. And to be short it too, it's just come in about 8 points. So I think that's kind of dangerous. For here, I just think it's an avoid. You had your short here, get out of your long here, and you know, there's your pick your spot and see what's next. So that's that. So let's go to stocks. Social media has been beat up, been battered, and it's been bruised. I haven't really been long Facebook since earnings day, because it's given you no reason to. It lost momentum. The earnings weren't enough to break it out, so I waited for some kind of spot. Today, it did give you your first, you know, not even compelling reason to be long it, but it gave you a small reason to be long it. First, you know, here is when it failed. Here is when you had your earnings outside day, get out of the stock. Then all of a sudden, it broke below this here. And now, you know, it's trying to hold. Tried to show relative strength. So I'm in small. It's my only actual long position right now, besides Altira calls, which I've had for about a month or so. So we'll see what happens there. It's nothing so great. Okay, I'm not even, you know, I don't know what's next here. It's broken this trend line. It paused. Sometimes you pause at 200-day and then it goes lower. Sometimes it continues, but it's below this. And I just, you know, didn't know what else to potentially look for. Some kind of, should have just been flat overnight, because there's enough movement intraday. But anyway, it does seem like it can go a little bit higher. Twitter, you know, still weak. Trying to do a bottom tail here, still not giving you a true sign. LinkedIn, I actually made money short today. I shorted it on the open, added to it below 198.5, and I covered like 197s just for a trade, and then it kind of reversed back up, and not giving you much follow through either which way. You know, big island top, you know, gap up, gap down, all these people are trapped, and it's definitely in a void, and let it rebuild and figure out what's next. Apple, I shorted the open. Yes, Red Dog shorted the open, and it was actually a decent trade. You go to the 5-minute chart and you could see it opened up right into prior resistance, so it made some sense. Okay, right here. It's been a weak stock. It gave back a lot, so I shorted it. I'm like, you know, in the VTF, I said, I think you have two different, you know, areas of resistance here and here, so I shorted here, and then it broke below support. I think I was probably covered here because I'm such a bad short. Gave you a follow through to the downside, then gave you a trade back up to retest where it broke down from. Gave you a descending channel here, and then at the end of the day, maybe because it, you know, people need to buy it today to get the dividend, it wound up, let's see, where did it pop above it? A little bit further down. So, you know, with that being said, it was a decent two-way trade today. Closed relatively strong. It might be people wanting to get in on the dividend. You go back to the daily, and it's still not telling you much, except for that the trade changed when it didn't hold 133. It didn't hold the momentum breakout level on a very solid report. 3 days down, bounce up, lower high, off the lows, not really into a actually, how does that line up that way? This is 121.63. It didn't hit there today. It hit as low as 123. I was hoping it would get to there. So at this point, you know, it's still sort of trapped here. Not very strong, giving you 3 to 5 minute trades, and I would just continue to take it and see what's next. They did issue bonds for a buyback. That should happen soon, and then we'll figure out. But overall, this was different than after earnings. This gap up that never got filled, and then, you know, this gap up right here that never got filled. Both led to good moves. One move here, one move there. This gap up was filled, led to some corrective activity. Now we'll see if this support holds. But, you know, it kind of lines with the market. Then you have, I talked about how NFLX tried to break out yesterday and failed. That maybe it's a short below, I think it was 565. And that's what it basically did. You had a topping tail into resistance, which should get you out of it. If momentum levels don't hold, you get out. And then today it gave you a short below yesterday's low, and that's that. It's still overall one of the few stocks above the 8-day, above the 21-day, but you know, this was a 2-day short, not long. Amazon, you know, choppy to the downside. You know, take your trades, 3 to 5 minute chart. It, you know, topping tails into resistance, so was weaker today. Did come off the lows. It still has a big gap here. It just needs time, and just got to either not trade it or wait, I guess. Google's been broken. Not much to say about there. Tried it here. Thank goodness I have stops. Got stopped out there, and still all on its way down below the moving averages. And that's the way a lot of things look. You know, there are markets that, you know, are tight and ready to explode, and stocks are making up 52-week highs, and you could hold multiple positions. You could use a tier system, or you're in markets when sectors are below the 8 and 21-day moving average. Some are breaking the 50-day moving averages. You have breakout failures. You have choppy air pockets, and that's really what we're in now. So when you're in that type of market, you have less positions. If you look at Mark usually has 15, 20 positions. He's got 2. You know, me, I usually have 6 or 7. I have 1, and I was net short the past 2 nights. I probably should have a short on tonight, but you know, I wanted to have low gross, low net, and figure out because jobs reports, you know, Friday. So, you know, every market is conducive for different types of styles in trading. You know, some people made a lot of money in that little stock yesterday and then shorted it today, made a lot of money, and you're playing ranges, and you don't care what the S&P is doing. You're looking for the news, you're looking for the volume, and that's cool too. So just figure out where you want to live. And if you're a macro investor and you're watching me today and you've been investing and you're a baby boomer, or you started 10 years ago and all you do is contribute money every month into a 401k or a 529 for your kid, continue to do it. Even if we correct 10, 15, 20%, it'll help your average cost if you have a long-term time horizon. If you put your first dollar in the market the day before the 1987 crashed and continued every single month thereafter, you did awesome. If you were more my age and you started before 9/11, you know, 2000, and said, I'm going to buy an S&P fund right now and put $500 in an S&P fund every single month, and then the crash happened and 9/11 happened, you did really well. Then my wife, she started working, I think, in 2005. Before the financial crisis, she started putting into her 401k every single month. Market rolled over. We went to SPS 6666, or whatever, 3 6s, and she's a great average cost now. So if you have a long-term account, continue to stay the course, especially if you're 40 and under. And if you trade intermediate trends, very wishy-washy. I would be a little flexible here. And if you trade for active cash flow, use the setups that we teach and we train you. And if you do all 3, congratulations. You're probably doing real well, and you spend a lot of time, you know, analyzing the markets, and you do your homework. And that's the only way you could get by in these times, in any times, in any job, is being prepared, knowing your craft, having a plan, and then work your plan, plan your work, and then work your plan. And that's how you have success. See you tomorrow.